following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach we go, dear friends. Well, we've been low as 2168.50 on the S&P cash. We're at 2177, off about 1 point. Volume is a little bit better, about 100 million on the New York Stock Exchange than we started yesterday, maybe 150 million, something like that. Some cross currents with the Fed meeting notes pushed the market down, now trying to push it up a little bit. The Fed sounds very much like a bunch of folks that want to have their cake and eat it too. They want to tell everybody how they're raising rates, but they don't actually want to do it. And the only comment I have is, liar, liar, pants on fire. No one believes you anymore. And that's pretty much it. We're going to get into a point where they will actually raise rates. No one will believe them, and they'll crash the market. Because they just can't. I guess it goes back to Greenspan and the rest of these guys. They just can't help themselves. They want to please everybody, and you got to please yourself. Now, what a great sign. Garden party reference there for anybody got it. Anyway, 2178. We're basically flat on the day. We'll have to see what happens at the end of the day, which is vastly more important. Options continue to point to about $1 billion in the SPYs for every 10 points down. So the bias is going to be lower. It's certainly not going to be higher between now and Friday. Could we stay here? Yes, but I can't imagine being long. If you had a bias, it probably had to, it has to be to the downside. Now, does it have to go down now? But I'm not really worried about any higher prices here. A lot of people think that they're going to run this market yet higher into Friday. I think the best we can hope for is that it just goes sideways. If you're a bull and if you're a bear, I think that we could get down to 2120, maybe close somewhere around 2150 on the S&P cash. But we'll watch the volume and everything else. It's just very tough for me to see the earnings coming out and seeing a lot of people that want to go long into the end of August and the beginning of September, which is traditionally a time where many people sell the dogs and buy the faster horses by the end of September for the end of the year. And you got to say that a lot of them are kind of weak. Anyway, flat on the day so far. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what else do we have? That's it. Let's get into a little news, and we'll wait for this market to digest its news. But that's it. What else do we have going on out here? 1998, the Russian government on this day devalues the ruble and declares a moratorium on paying its foreign debt. A de facto default that sends the global bond markets crashing triggers the collapse of the giant U.S. hedge fund long-term capital management and sends shockwaves through the world's financial systems. By October, or November, can't remember now. By October or November, this turns everything into a veritable bearish toilet bowl, sucking everything down. And, of course, whatever it was, October or November, we finally see the Treasury Department and the Feds comes out midday trying to save this market. And I think that's the day we had a $1,000 point on the Dow even back then movement from the highs to the lows. I think they came out around 1 o'clock or something, if memory serves me right. And of course, this is it only in the, this is what, August. So this took August, September, October, and kind of into that November time to actually put itself together. A lot of accidents or big things come from a variety of mistakes and failures. And the failure of 1998 started today with a giant bet by long-term capital management, just thinking if they could just continue to double down and double down and double down, that eventually they would be right. At this time in 1998, they had 110-to-1 leverage. They only had to have the market go down a little bit to wipe out all their money. And of course, that's exactly what happened on this day in 1998. Other things going on out here. JA Solar came out with earnings and, of course, whiffed. It is lower. I don't think that there's anything going to change in this solar sector anytime soon. It has problems. The NSA got hacked. If you are not up with all your virus protection and everything, I would suggest that you do it. We talked, was it 2 years ago, when the Italian company that sold their wares to all these black bag guys and the governments all over the world to hack others, their tools ended up being splayed all over for everybody to get when a hacking group came and got them. And for the next year, we saw those tools used extensively in the market. Right now, these hackers called the shadow brokers are asking $1 million dollars in bitcoins to release the NSA hacking tools. No doubt these things know every kind of zero-day exploit on just about every kind of machine. We've had Snowden even weigh in on this already today. But if you think we've been hacked before, the motherlode of all great exploits has now hit the dark web. My guess is this stuff will be everywhere by Christmas. And you probably find maybe even the NSA trying to buy it back on the dark web. But it's once it's out, that's too easy to make a copy. You just can't do anything like that. We've got 2181 on the S&P cash, up 3 points now. Volume 2.16 billion shares. So I don't know what else you can say about it other than that. Cisco is going to get rid of somewhere between 15 and 20% of its workforce. That would be something like about 12,000 folks. I didn't get the quote in there, did I? Anyway, they're basically saying that they're going to go and focus on software and try to get away from the hardware that they've been known for so long. Mr. Cook next week under Apple is going to get to his 5-year vesting period, it looks like, and the stock will be above the level that he needed to. We've talked about this before, but right now he would be up to the tune of $535 million as long as Apple does not crash between now and next Wednesday. He will be the most highest paid CEO when those and everything else vests mid next week on his 5-year anniversary of being CEO.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. We're going to go to Steve in Myrtle Beach. How you doing today, Steve?
Hey, David. I'm doing great. How are you today?
Fantastic.
Good. Hey, I'm a brand new subscriber, and I just wondered if you could give me a place to go to read up on your method or give me a quick short tutorial on it. I've been reading your charts trying to figure out what the heck all this stuff means.
Well, like in the newsletter, it says, I assume that you've at least read Tom O'Brien's book, The Art of Timing the Trade, because about 90% of it's in there, and you won't have to buy 10 different books.
Oh, okay.
Cool.
I haven't read that book yet.
Well, basically, if you want to go back to what I do, goes back to a great deal of many people. But the genesis is a gentleman called Richard Wyckoff, who in the 1910, 20, 30s worked on a price and volume, i.e., he looked at stocks when they were either breaking previous highs or trying to break previous lows. All the charts in my newsletter are pretty much that. They're either coming up, looking at gaps that happened in trading before that, or they're testing either lows or highs and probably doing it on significantly lighter volume.
Okay.
So if you looked at the ones today, you would have seen stocks that were being tested. I talk about them a lot on the show. But those are what I'm looking at. Instead of looking at just the indexes, I look for the bigger, what I call the fat pitch. And that normally happens when there's a ton of stocks all on the wrong side of the market.
Right.
And by the wrong side, I mean all testing, you get 200-300 stocks that are all down testing pre-close on half the volume. You're probably going to get a rip-your-face-off rally. And if you got, like we've had here lately, a market that goes to new highs and can't draw flies, you got a problem there too. So it's all about price and volume. I have a couple of things that I do. but I want to get a nice pattern out. We can do one right here.
Okay.
Let's say that you like Gartley patterns.
Okay.
Just that this one is just up right at the moment, so we can kind of take a good look at it. Yeah, I think I can. Yeah, I think it went a penny above, maybe a penny above. Is it 1 year, maybe 2 years? Yeah, I had it in the newsletter. It was a Gartley pattern in Apple. Yeah, it went it went above and ticked above the 9.0 yesterday, or I mean the 90% yesterday. But this one was pretty good in here. But it shows you what I'm looking for, and that is that you get a leg down with a lot of energy, and in this case, it's Apple's April 14th high to its May 12th low, and my power law vector indicator here shows an 18. Then we see the move from June 27th back up to yesterday. That had about a 13. It's kind of a logarithmic number, so you got probably somewhere in the neighborhood of about half the energy on this move back up. It comes to this gap right here that we have on April 18th that had 60 million shares. We had 33 million shares yesterday. We had 25, let's call it 26 million shares the day before. So when you're looking at all those charts, what I'm always doing is looking at the previous highs, looking at the previous low, and I want to see some confirmation also, if possible, between the energy up and the energy down. So if you looked at the ones in there today, in fact, I had one in there today, which would be a good example. I can get it going here. There we go. What was today? The 17th. Okay, let's find the one that I marked up here because I kind of vaguely remember the one I marked up. Okay, here's CarMax.
Yeah.
Okay. This is exactly what I'm looking at. 1.9 million shares for the first one, 1.4 for the high yesterday, okay? 6.2 on the way down, 4 on the way up. Now, these aren't going to be exact because maybe they started at $1.02 or something more than the other one. But you want to see the story, I call it being congruent. That is, if your buddy calls you a foul name, but he's got a smile on his face, you know he doesn't mean it. But if he's got a scowl on your face and looks like a junkyard dog, maybe you did something with his wife that he doesn't quite like. You think he's probably serious, right?
Right.
So if he says something horrible and he's got a scowl, you know that he's being congruent. Both things are saying the same thing. Many times in the stock market, what you get is energy on the way up, but then it hits the high and the volume kind of falls out. Then it pulls back and then maybe trades 3 or 4 times. You need to get the complete story, which is from the high to the low, what did it do? From the low to the high, what did it do? The energy between the two, and then the volume at the highs. What I dislike also about CarMax, we'll look at the actual chart, is also that you still have high volume lows down here at 41.88 and 41.25. The volume never shrank, right?
Right.
So the whole point of looking at these are breaking them down and finding stocks that are being congruent and either saying, yes, I'm done going higher. There was no energy on the way up. When I got to the previous high, the energy wasn't there. And then you start seeing things kind of like, what is that, CarMax? I think I had it in my thing here today, KMX. So when you look at those now, it's not uncommon to see the kind of move off of the high that you saw in CarMax. This is not a confirmation, but it does give you an idea when stocks are incredibly weak or incredibly strong. So any of the stocks that you saw in the newsletter this morning, they're all going to be one thing. They've gone to a big gap with high volume down, and they had light volume as they entered that gap. They went to a previous low and had very light volume. So those are the ones that I'm either keying off of. And for the most part, I'm either going to play individual stocks or the entire market. And sometimes you will see unfortunately, it takes a while. But the very biggest move, sometimes I've had 200 stocks or 250 charts in one edition of the newsletter. And that's pretty good indication that everything in the world is about ready to let loose.
Right.
I showed, if we go back, it had to be, I'm pretty sure it was the Monday after the Brit exit. I went through on the show where we had some 40 Gartley patterns, and they were all beautiful patterns. They were all exactly what you wanted. You had energy on the way down, and then you formed these Gartley patterns, and that was kind of the end of it. But you want to hang on through the break?
Yeah, sure.
Okay, we'll talk more. We'll be back in a minute. 2178 on the S&P cash, 2.27 billion shares on the New York Consolidated Tape.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah. Anyway, we're talking with Steve in Myrtle Beach out there today. You still there?
Yes, I am here, David.
Okay. So, what we're looking for are these patterns, and I want to see a pattern that basically is always saying the same thing. So you jump in when you have any questions. Let's just go through a couple of charts, and I think you'll quickly get the idea. But
Sure.
like one of the charts we had in there was Baker Hughes this morning.
Right. I saw that.
My charts show the gap with a big bar when there's no trading between the close of one day and the open of the next. So it could be a gap up or a gap down, but there's been no trading there, right? And stocks
Right.
like to bounce off those levels fairly decently and test them, retest them. On Baker Hughes, what this chart would show is the big gap down on the 11th of December last year on 2015. It did so on 8.5 million shares, came up, spiked it for just a little while on May 2nd with 13 million shares. So
Right.
it did so on higher volume. So you have to assume that high volume is not a high until it gets retested, right?
Right.
So what you want to do is see this retested with some decent volume and a sign of strength when you break out. And what you get yesterday as you went into it was 3.5 million shares. So all those charts that I have will tell a story as you look at them, but they're all going to say the same thing. They're either going to say, I went to a higher high or I went to a gap, and the volume was very much lighter. And that could be on the way up or the way down. If it busted through on a higher volume, then the stock may go up. It may do a variety of things, right? But the big signals that I look for are always light volume at highs and a light volume at lows, because that pretty much tells me exactly that we may have a major reversal in the stock. And also my risk reward is going to be much better than anything else.
Gotcha. So
Okay.
if you get big volume, like on Cambrex, CB, I was looking at Cambrex. Yeah, I guess maybe it was in yesterday. Maybe.
CBM?
But anyway, CBM, yes.
Yeah.
That one looked like it had gone down to a level it had touched a couple of times before on pretty big volume. So is this telling you this is going to break and go lower, or what is that? What is that telling me there?
Well, it is telling you the story of the individual stock, okay? So you want to put that together. That's a very good question. You want to put that together with some other things, okay? First of all, the direction of the market or the main market is going to be 50% of your trade.
Sure.
So which way, the first question you're going to ask when you see this is, okay, it's down here. It's down here on lighter volume. Kind of interesting. Now, if I am thinking that market is going higher, then I'm going to say I'm going to be very interested in this stock. If I think the market's going lower, I'll probably move on. If I pass that test, then I want to find out what this company does, and I want to look at stocks in that sector, maybe ETFs in that sector. I want to do a little bit more. This is a chart by itself on an individual stock is about 25% of the story.
Right.
But what you will find out is that you'll see 3 or 4 or 5 of these charts over the next couple of days if this sector is really giving you a big signal.
Right.
When you go back to the highs of the right before the housing bubble, I think it was May 5th in 2000. Was it 2008 or 2007?
Probably
May
7.
5th of 2007. Is that right? Or 2008? I never can remember. Anyway, if you go back to those dates, what you will find out, I've been doing this a long time. That is looking at just individual charts, my scans, and then moving back up to the market from there. You will find every one of the major broker dealers, Fannie Mae, Freddie Mac, every single one of them within a day of that May 5th high tested its previous high on 50% of the volume. So you start to put together a story,
Right.
and the bigger stories when more and more stocks in the same sector start telling you the same thing. So as I look through these, sometimes it's just an individual stock and maybe something just affecting that individual stock, and maybe you can make money off of that.
Right.
But what you really like is when all these stocks in the same sector start telling you that there just isn't a whole lot left in either going up or going down. And there's where you can spot a trend change And normally with those trend changes, you can get very cheap options and or everybody's on one side of the boat. And that's normally when you get rip your heads off rallies and then tear your face off bear markets.
Gotcha. So basically, the gas is running out of the tank is what you were seeing in 07 then, or 08.
Yeah. When you see, and I've hit a couple of these over the last couple of years, you can get some nice earnings. But when you see 4 or 5 all in the same sector, all come up, and the volume's not there at all in all of them, that's telling you that not only can you make a trade, but you can make a trade in size. You don't really, you've got probably the best signals that you will ever get. So I tend to be, you ask kind of a general question. So I tend to play kind of small ball when there's just a handful of things going on.
Right.
I may have 1 or 2 or 3 positions going on, and I have like 4 right now.
Right.
I would be 100% invested if I saw something like that again in any kind of sector, letting me know that all the different markets are probably lined up for some kind of big move, and I can buy either buy options or calls or something else. Now, that's what I'm kind of saying. I really kind of start at the beginning, and you might hear people say that, I'll delve deep into the Dow and look at all 30 stocks in the Dow, and that's going to tell me a lot more than what the Dow is doing itself. Maybe it's going higher. It's hard to look at the volume. But if you look at all 30 stocks, you're going to get probably a much better idea than just looking at the index in it. So I tend to work small to large, and I do that by scanning these stocks and looking each day of which ones. And then over a couple of days, I'll go, you know what? I saw 3 travel stocks, and they all were telling me that the volume was very light on the way on the highs. Now, these markets don't always just turn on a dime.
Right.
It may take 3 or 4 or a couple of days. We have a long-term or a longer-term option into September on a stock, and once you see these signals, you just kind of have to plant your flag and sit on your hands. You never know where and what is going to come out of it, but generally, if you see a bunch of them all at those highs, it's probably a fairly good time to start saying, hey, there's something bigger going on in here in the sector. And if you get all the sectors kind of singing together in harmony, then that's when you put the throttles to the put the pedal to the metal. So there's a little more on there.
Yeah.
Anyway, anything else?
I appreciate that. No, that's it. I appreciate the little primer.
You can give me a email at path@tfnn.com if you have any more questions. We'll get to a few more before the end of the day.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. And that's pretty much all about it. I'm out here looking, and most of my show is looking at these stocks. But again, 25% probably the stock. Sometimes it can be bigger than that, but on average, about 25% is the sector, about 50% is the market if you want to figure out where a stock is going. So you want to be long when the market's going higher, because that's the biggest influence of all stocks in the market. You can find exceptions to every rule, but as a broad brush, kind of very interesting. We're going to look at some stocks out here that are headed lower today. Crude is one. We were short this in the Tech Insider a year ago when this thing was up in the $6 range. This was one that I kind of dug into fairly far, and we made our money long before everybody was hip to the problem that Crude has. But I did report that there was a company called Plexus in England that had figured out a way to make LEDs on silicon instead of on a substrate that cost literally 10 times as much. And when those started to come out, that Crude was going to have a real problem keeping its margins. That is the story on it today. It's got a lot of volume coming in. It's just very tough to see anything like a light bulb carry high margins as Crude did, even if you're early into the market and the leader. I'm thinking when I'm talking about this stock about how Tesla is going to work. Tesla's got a lot of margins. Eventually, like Crude, those margins will start going from the 20-25% that they say that they're getting, which is dubious at best. But the same thing happened in Crude. If you're early to the market, you can make a lot of money. Eventually, a lot of competitors come along. Your margins start to fail. People come up with a little better technology that is cheaper to work on. Crude still has a decent market. It's just almost to a one. Huge stocks like Crude and other ones like that, what you end up with is stocks that go to heaven. This thing was a 76 bucks on October 22nd, 2013. But eventually, even Apple, we talked about how margins were going to start, eroding. Apple was 130 with 69% margins. It's 109 now with 65% margins. That'll eventually get to 60% margins and 55. It's always hard to carry those kind of margins forever. Intel may be the only company that can continue to do it. You have to be a virtual monopoly to do it, as Intel is. Apple less so. It's only 20%, or actually now about 16% of the market is iPhones. The other 80% is Android, and 4% for all the other runs, BlackBerry and all the other Windows and everything else. Pretty small percentage. But anyway, a good lesson out here to look at is, are you in a company, where is it in the bell curve of disruption? And when you get on that right side of the bell curve, it's very, very tough to carry kind of margins in a, what is a consumer marketplace? And that's why I continue to think that Tesla will have a similar fate as Crude. They're not bad companies and they're not bad cars. They're just incredibly overpriced for what will happen in the future. And, you know, you can see it in these. I still have Crude light bulbs, but the thing is that the Crude light bulb is what, 11, 12 bucks at Home Depot, and you can get something similar at Walmart for about $4. So what do? Are people going to pay, you know, $4 or $12? There are a couple of reasons to buy Crude's light bulbs and LEDs for very specific things. So I don't think they're going out of business, but it is tough to see them end up being the GE of LED light bulbs without 20 other competitors, probably all of them in China that don't have to worry about EPA regulations, that don't worry about the 20 people that had to die to make your light bulb that jumped off the roof. It becomes, when you don't have a technology that's easily defendable, it is problematic. But let's take a look at that. Other stocks that have made a high out here that I'm kind of keeping an eye on, very close anyway, is FedEx. This has come back to its gap down that started on the 3rd of May, came all the way down to 145, come back all the way back up. Energy is about the same, so I can't get real bearish on this. You're going into Christmas season 2, but could you get a pullback? You could. We talked about CarMax. What was else out here in earnings land? Target. This has probably got to be the one that makes you more bearish than anything, especially with Walmart coming up in the next day or so. Target, just saying that their business is slowing, not having a very good idea on how they're going to turn that around. The CEO kind of avoided the earnings call. The CFO was pushed out there to say that, man, we got some problems. And I thought I probably should have shorted this stock just because I went to their store maybe 4 weeks ago now. And this is summer in Florida. They had a giant end cap, like a double end cap down here in Florida in the middle of the summer, trying to sell humidifiers in the middle of the summer. I'm thinking that someone at Target hasn't figured out that probably anywhere south of Minneapolis in the middle of the summer, probably not a wise idea to be trying to sell humidifiers to a place that's got 90% humidity on a normal day. If they're doing something stupid like that, they're probably doing other stupid things. But the idea of selling a humidifier is kind of equal to selling ice to an Eskimo. You may be the best salesman in the world, but Eskimos, I don't see, Fort Knox with lots of gold bricks that these guys are towing behind their ski machines up there. They tend to look rather probably on the lower end of the economic scale. So I'm not going to get too excited about selling, the ice to Eskimos, nor humidifiers to people in Texas and in Florida. And I see that kind of stuff, and I just think maybe the management wasn't thinking out here. The only other thing I can think is the Dyson folks that are trying to sell this $200 humidifier in the middle of summer in Florida, in Tampa. Man, those Dyson folks, they're probably going to get a ton of these humidifiers back just when everybody needs them up north. You know, middle of January in Michigan, everybody's skin's falling off. That's probably the time to push your humidifier, not summer in Florida. It just doesn't make a lot of sense. I'm trying to think if anybody would buy a humidifier in Florida. I don't know if there's any reason to do it. Maybe if you've got a marijuana farm or something. I don't know about that either. But not a lot of ideas. Anyway, target down, huge volume. It's got this low at 65.50. High volume, 36 million shares. You're going to look for it down there soon enough. Be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Urban Outfitters came out with earnings last night. They pretty much went right up to resistance level. This is this gap from the 19th of May in 2015. It came down on 26 million shares. So you got a what they call a nice supply line here. This thing spiked into $37.16 with 11 million shares. So you're about half the volume back into that gap that's extended out since that end of May in 2015. Urban Outfitters had a couple things going for it. One of its competitors went bankrupt. Two, everybody and their dog was short these things because everybody seems to, well after the stock gets beaten up and go down, everybody's kind of sure that all these companies are going out of business. And, you know, all it takes, it's the same thing for just about any business. if you got a lot of people all fighting over the same business and someone goes out, probably going to be better for the people that are left around for a while anyway. Urban Outfitters, way too many people short, probably way too many people betting on this thing going out of business after a major competitor has gone out of business. I wouldn't have liked to be out here. You did have not something that would have had me long, but something that certainly wouldn't have had me short. And that's this very light volume test of the May 18th low, 24.29. You got into that, didn't pierce it, so I couldn't buy it and go long. But certainly it was telling you that maybe you had a bottom in. Can this come back here? It certainly probably might. I'm going to look for next summer. My guess is this thing is going to do well for a little while and then probably rotate over more. Mall sales don't look like they're really going to get any better. The only thing that's happening with this is they're going to get the business of the other folks that went out of business. But at this point, you kind of have to say, you know, you came in here, you tested a little with less than half the volume. You couldn't have bought it, or I couldn't have bought it without it retesting the 24.29. But you know what? You certainly wouldn't have been short this thing. You don't have a high volume low out here that you can bet on. And that would have had me at least staying out of this one for a while. What else did we have? Lowe's. Another one out here on the earnings beat for the retailers that dropped the chalupa. I'm going to give it the losing horn for today. Mostly because so many people are in this stock. And this thing's done nothing but go sideways for the last 2 weeks. Never really gave you a good clue. Not a lot of people short this stock. And again, we talked about this last week, that you kind of want some people short the stock in case it does go down, so you have some natural buyers. This one didn't have a lot of people thinking that this thing was going to head down. I think it was just a couple of days to cover on it. So it's not like you had a lot of people piling in on this one. And I don't think the earnings was that bad. You just didn't have a lot of people out here waiting to buy this thing when it failed. But earnings that bad? Not good. Comments were kind of bad in the earnings call out here, but you have a high volume move now down 6 million shares. If you go back to the last big 6 million share day, it's at about the same price point that goes back to, well, you had 13 million shares actually on the 18th of May when this thing came up, and you're basically right back in to that congestion zone. There's another congestion zone that goes from April 4th all the way through May 17th. That's probably where this thing is going to work its way back down at $75. So it got a little bit more on the way on the downside on that one to find some support. But it is the end of the summer. It's going to be tough to find a lot of people wanting to dive into this one before September. Anyway, hang on for Tom O'Brien in the meantime. So when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.